Ray Dalio made a statement somewhere to the effect that the next 5 years are going to be far more dramatic than anybody anticipates. And I think he implied negative dramatic. And he also, at that point in time, had a sentence that was quite good that says, quit looking at the price of your stock or the value of your stock. Look at the value of the underlying money in it. Okay, that's the reality. Your stock might go up 10% a year, but you're not making any money if the money supply is going, et cetera. Okay. Anyway, we think we're in a situation historically, politically, economically that we've never been in the U.S. before in modern times. We think there's been a stock market bubble of dimensions we've never seen before. You go back and look at 1923 to 29, 1995 to the dot-com top, let's say the 2002 bear low to the 2007 peak. These were all like doubles and triples in the S&P 500 and so forth. We just had a 7-fold increase in the price of the S&P from 2009, a 16-fold increase in the NASDAQ 100. Okay. And if you look at an M2 chart, you can see just explosion. And if you look at it at the same time, Fed funds chart, it just went, laid on the mat there. Free money, free money, free money. Okay. So it's easy to understand why those bubbles occurred. So it's somewhat logical that when they come unwound, if and to the extent there were errors made by corporations, families, investors, government spending, et cetera, based on the assumptions of free or cheap money, cheaper than reality. Okay. And long-term commitments were made based on that. Again, could be portfolio, could be corporate planning, et cetera. And you're wrong. And it turns out, oops, we're wrong. Money didn't stay cheap. And all of a sudden, it's like ripping a bandage off of a huge sore. And I think that's now accomplished. The Fed has done that. And so now everybody's very hopeful again. Well, there's certain events that people aren't looking at. And that's political chaos type events. We all know that we've, quote, got a divided country. Okay, that's been known for several years now. It's no longer just the Democrats, Republicans alternating power every 4 to 8 years, basically on the same course. Government grows, taxes grow, debt grows. It doesn't matter who's in charge. Well, nobody's factoring into their market assumptions or expectations these things. They're still talking about earnings or interest rates, the Fed policy and all that. In other words, the things you'd normally talk about if the market's at a top or possibly transitioning in most people's minds, the normal econometric type things you'd look at, data points and so forth. They should be looking, I think, at political upheaval. And the way that could manifest itself is in various ways. One would be a secession in the currency markets, meaning that, like the state of Texas, there's a proposal, and it's quite serious, to have a crypto Texas currency that's backed by gold. Okay, if they did that, in effect, that is a secession from monopoly control of the central bank of the U.S. over what the money is here in the U.S., the dollar. Okay, that would undercut the potency of the Fed, because if an alternative currency popped up that was gold backed and you couldn't inflate or deflate it at will like they can the dollar, you can't manipulate it. You can't create policy out of it. It is what it is. Then that in effect undercuts the central bank's power or the central government's power. Well, Alaska has also, I believe they've actually passed it. The legislature's passed a rule that says gold and silver are legal tender in the state of Alaska. They're not a commodity, they're legal tender. Well, that in effect is secession as well. And if the political division continues, which we think it will, then some of these things are going to happen. And so all of a sudden, instead of just econometric metrics that you should be looking at, there's the political divide with in the street type ramifications. It's like 52 card pickup. All of your notions of what's normal are gone. You have to rethink the whole thing. And in that sort of environment, and I think that's why gold is doing what it's doing, not just because it knows that if the bubble bursts, the central banks will have to bail it out, because they have to come in and save the municipalities, the state governments that can't afford to pay their policemen and their teachers, et cetera, pension funds in jeopardy. Add this to the mix. If the market rolls over, and we think it will, it's primarily led by 5 or 6 stocks. Anybody with a brain realizes that if you look at the NASDAQ 100 or the S&P 500 and want to explain the last 3 or 4 months of advance, if you take out the top 5 stocks, you won't have that advance, because they're all, it's 50% of the NASDAQ, 30% of the S&P, and that's what constituted the entire move. But if that rolls over again, and it's associated this time with actual pain, like dropping metrics, unemployment suddenly gets worse. People have a sense of, oh my gosh, all my hopes that I had because of that rally are shot. I was wrong. That will be emotional, and that will add to the fire under the feet here. If and when, and I do think you're going to get it, a rollover in the stock market again, I think that will be an emotional igniter that gets things hotter quickly. And so I'm looking for some markets, in particular gold, I think, and silver. If there's more upside, I think there's a lot more. We go through the highs in gold. So you're at a triple top, trying to punch through. So if we burst through that barrier, and I think we will, because I think it's been a benign correction, I think what comes on the other side will be more ballistic, more chaos theory. And I suspect that it'll be somewhat correlated to a rollover in that major asset category, the stock market. And a flow of assets, again, out of that category into a safe alternative. So something's being said there. And I think the fact that they now rush back to their highs, especially gold back to its highs, also says something. It's saying there's money flowing out of somewhere else and going into gold, and it's continuing. And I think what's on the other side of that's chaos theory, meaning more ballistic move, no more incremental anymore. I think gold has divorced itself. I think smart money knows that. Ray Dalios of the world have already expressed that, and including some other major portfolio managers who've noticed. And I argue that what we had in the late 70s is something you should look at, because back then we had global stagflation, global recession, and yet commodities exploded and gold and silver exploded even more all during those years. I think this time around it's even going to be more so. For gold and silver, I think it's a monetary event, because we know, anybody with their brain should know, the central banks are not going to continue on course. They will shift. In fact, they're probably about to shift anyway, like going plateau, for example. If they see data numbers that concern them, if they see a drop in the financial sector now, which is something we're suspecting, not the banking sector, banks led, I'm talking about the general financial sector, they're going to get concerned and they're going to go back to what they do, what they were created for, monetize the debt, print the money. And gold knows that. That's why it's doing what it's doing. So I think it'll benefit during this rather than suffer during a market downturn. Now, what about the miners? Yes, they're anemic. They've been far weaker than silver and much weaker than gold, but they tend to move in slingshot manner. When gold goes up, like if you go back and look at that 2020 explosion, they beat the pants off of gold. But during that 2.5 years of more or less horizontal correction in gold, they declined a lot more. We argue that when gold reasserts itself to the point where even an average price chartist can look at the chart and say, oh my gosh, I was wrong. It just broke out of all-time highs. The gold miners are going to flip, and they're going to outperform gold.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.